Happy Friday, traders. It is Friday, the 18th of March, 2022. This is episode number 2194. It is Triple Witching Friday. There is futures expiration today, options on futures, and options on equities all expiring today. It used to be called quad witching when we used to have single stock futures, but we don't really have those, at least for now. And so it's turned into a triple witching instead of quad witching. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing the market creep down after what was a really strong close yesterday. We actually shifted the point of control on volume to the high of the day into the close yesterday. We'll look at that in a little bit. Oh, 1 second. We'll look at that in a minute. It's kind of interesting because the expectation was we would continue to push up. There was a huge push in Delta yesterday as well, and it ended up pulling back this morning across the board. We're seeing the same in the NASDAQ. We're seeing the same in the Dow, Russell, and so on. One of the key things to keep an eye on is that crude had a really strong push yesterday. It was in a trend up. And is maintaining and holding above $100 point of control yesterday. After that rally was above $100. The trip by Boris Johnson, the Prime Minister of England, of the UK, went to the Saudis to talk about increasing production. The Saudis are maintaining the current quotas as required by OPEC, and so oil is just climbing up and holding these higher prices. I have an opinion on oil, but that's not what we're here for. One of the things that's causing jitters is that the Ukraine conflict is just escalating. There were cruise missiles that were fired from Russia into the Ukraine early this morning. Explosions all over the place. And so that's where this is creating an issue in that this is impacting energy, food, and other commodity prices, including chip making, all that stuff. So it's very difficult. It's a very difficult situation here, and the entire diplomatic and political scene is about providing Putin with an off-ramp out of this problem, because it has gone horrendously bad and net negative really for Russia, the way this campaign was made by what is considered a formidable military presence in the world. And so now everybody's scrambling to figure out how can Putin get out of this without, resorting to threatening with weapons of mass destruction, that sort of thing. Basically, the world is just, while we're trading here, the world's trying to avert World War III, which is a remote possibility. Today, we have U.S. existing home sales coming out at 10. We have Fed speakers, Barkins, Evans, and Bowman. Today, looking across the board, again, we have a little bit of risk-off sentiment, but we are holding on to the upper distribution of the range. We're holding above 43.60 in the S&P. And so the overall sentiment remains bullish. We'll look at that in a minute. The S&P is balanced, 210,000 contracts traded. It is pretty light trading. The range is decent. We see the same thing as we saw yesterday. The market is balanced and consolidating. We opened in what was a bit of a drive yesterday and never really looked back. We had some pretty decent down rotations, but overall buyers are in control. And as we pushed out of the prior balance as discussed yesterday, point of control 43.30 this morning. Something's up with this. This isn't correct. The point of control is actually 43.74. There's something going on with this spreadsheet. I'm sorry, it doesn't seem to be updating properly. 1 second. Gonna nip this in the bud right here. There we go. Yeah, I was looking at the chart and it looked like we didn't breach 200,000. So there it is, 188,000. Inventory is 100% short and we've got 30 points of range. And that's where that stands. Are you saying that my sound is messed up? Is that what you are saying? That could be a bandwidth issue. Test 1, 2, 3. How is that? How is that? 1, 2, 3. Auto tune. I'm auto tuning. Sound very tiny. That's okay. Just give me a second to reset. Thank you for that. Just checking the sound settings. If I sound hollow, that tells me that it's picking up the wrong microphone. 1 second, please. Test. Hang tight. How about now? This is my other headset. All right. Thanks, guys. Sorry about that. Some technical issues today. Again, the S&P is balanced, 189,000 contracts, very light trading for expiration Friday. And for the recent past, inventory is 100% short. We've traded 100% of the range so far overnight, or the volume so far overnight. Underneath the settlement price of yesterday, we settled near the high yesterday. The range is about 30 points, which is the tightest we've seen in about 2 weeks. The point of control, 43.74. The market is trading around 43.74. We're at 43.71.5. We are beneath VWAP, beneath the mid, and that's where we stand. Let's take a look at where we are today. You know, that's a Rode mic over there. That's not a cheap mic, but for some reason, I don't know. So here's what we did yesterday. Yesterday we opened up. We went sideways for a minute. We had basically an open auction in range, and yesterday, if you recall, the expectation was that we are likely to open in a sideways auction, and then we're likely to take a bid, take out the overnight high, which at the time was about 63 or so, 43.63. Take out the overnight high and just go sideways for the rest of the session. Why? Because the Fed has been priced in. It is expiration week. We have pushed quite a ways, and as I said yesterday, we really have sprinted over the last couple of days to the upside, and the expectation is the market is likely to slow down and digest into expiration. I expect today would be the same. Today I'm not going to trade past about the first hour. I think there's a better use of my time. I'm going to spend it with my daughter who's coming in to visit from university. So yesterday the expectation was push the overnight high and go sideways, which is true until about here, right? And then we didn't manage to break the IB. I talked about this in the Conversion Trading Head Trader channel, that we are very likely to break the IB high. So gunning for that IB high trade. And then we break the IB and we build this quite tight. Look at that. This is a fantastically tight balance zone, coiling, zipper, whatever you want to call it. and then it resolves in a very strong impulse higher, and then from there we just kind of grind up. And it's lately it's been a lot of this. I talked about this yesterday, I believe. There's been a lot of this fast drop on volume, then spike in the other direction. Here it consolidates and then it looks like it's failing, but then it spikes in the other direction. There's almost like an algorithmic process of checking the base before these systems kick on. So the market waits for the base to get tested, stops to get taken, and then there's confidence that it should get long. It's almost like the old Jesse Livermore story about checking to see if there are really any sellers before confidently buying. So this week has never been a very profitable week. I don't think I've ever had an above average or a new high week into expiration. You know, I've been trading for 22 years. I've been trading futures for about 20 of those, 20 of those. And I can't tell you that this week is just a great week to be off. It's a fantastic week to go sit on a beach in Mexico or something, rather than trading, because the return for the risk, for the per unit of risk, is very poor for me personally. And this week is no exception. I mean, I chopped around. My trades got chopped around a lot this week, and it's just the way that it is. And so this kind of whipsaw type of action is what we saw throughout the week. The news effect doesn't help that. The fact that we're responding to what President Zelensky said versus what China's saying. You know, Biden's administration was threatening China yesterday. The big news today, actually, that I didn't mention, is that Biden is going to be speaking with President Xi, Prime Minister Xi, or President, I don't remember which one it is, today. And Russia had gone to China to ask for both a military and economic help, and China's walked back its support for this Russian incursion into Ukraine. So it's just a mess. It's just a mess. But here we are. We've rallied. We've broken out of that lower distribution that we were in. We have tested thoroughly yesterday. We have tested the 43.34.50, formerly 43.43 in the March contract. This is a very important area. We came right back to it here, and then boom, we have another day of what's called initiative buying away from value. And what we did yesterday is we broke that 44.05 high. See this? We talked about this yesterday. Here, let's clean this up. Remember, I drew these boxes. I said this is the lower balance. This is the upper balance right here. And that upper balance goes to 44.04, 44.05. And we poked through that yesterday, and we're pulling back. So what we have is this push, pull, higher low, even higher low. And we have taken out this key pivot. We ran some stops, but we are pulling back, and it's likely to fall back in. Notice the point of control for the week is way down here, way at the lower end. I'm expecting the market to pull back to where the most recent balance is. So somewhere in the 43.12 area. Not today, not necessarily today, because that would be a pretty decent reversal, about 60 points. But over the next couple of days, I expect this to rest, consolidate, form a few days of balance before rotating to 44.51, the next point of control up, 44.51, as we work ourselves back through a mountain of worry across the board. Okay, so that's where we stand. That's the big picture. Here's where we have been in the overnight session. We drifted right back off the high. You can see that we shifted the point of control for the entire session. Look at this blunt high. This is a really terrible high, very weak high. It doesn't show up at all on your market profile chart. Look at that. It shows as a stream. This is the problem with market profiling or TPOs, using TPOs. 30-minute brackets, is it doesn't really show you where the volume really went. So this looks like a pretty decent spike with a close at the high, a string of single prints. But when you look at it profile-wise, there was a lot of volume that took place, and a lot of it occurred at the high. So this is not an excess high. It is a weak high. But since then, we have pulled back to the mid of yesterday, basically, right, to the mid of yesterday's session, and we are consolidating sideways. And if I zoom in here, let's zoom in. By the way, we're getting pretty close to the 200 moving average right up here, the 50 right there. But you know, as we zoom in here, we see that basically we're in this down channel. We are beneath the mid VWAP and the point of control, which are stacked one on top of the other. So what we have this morning is this semblance of a market that's sitting right in the middle of yesterday's auction. Remember, we pulled back to yesterday's mid. We're opening right in the middle of yesterday's auction, and then we have the overnight point of control, VWAP, and mid stacked above us. We have, you know, we don't have value yesterday because of pretty active price discovery. There is no value in this profile here. The market basically trended up, but we're in it's a triple distribution profile, and we're in the middle of distribution, and I believe that we are likely to be stuck in yesterday's range today. I could be incredibly wrong. There was quite a bit of buying into the close yesterday. You could see the delta lifting pretty strong. I mean, that was a heck of a delta on the way up, buying delta on the way up. But overall, I'm expecting this to have guardrails on the top and the bottom, and the overnight range is already describing that. The overnight range is a little bit less than 30 points. It's 29.75 points or so, and it's already describing the probability of a pretty tight, jagged type of trade. So as you come in, what I want to leave you with here is, as you come in, understand where we are, where we're opening, and what's likely, and what is, and trade off of that. Base your individual setups off of the idea that it's very likely to be stuck here in the middle and kind of jacking around quite a bit. So I just want to leave you with that. I don't want to put scenarios on here, although look at this. I mean, there's a nice floor right here. I wish I could draw a straight line, but there's a floor from yesterday's action right here at the low volume node right here. This is the I believe on our stock zones, that's the over under, or no, it's not, it's the stock zone. Okay, our over under is 94 and we're under, so I'm bearish coming into today's session because of that. We've fallen below the 94. But we do have this interesting early LIS, or line in the sand, and we want to see if it holds that 64 area. If it does not hold that 64 area and breaks through, then look for any pullback towards the 64 or so for a short. And if you're short, where would you aim? Where would you aim? Pop quiz. Where would you aim if you were short? What is the key target on the short side? The big target, of course, is 43, 34, 50. We've shot away from balance, and as we start to fail and become responsive, we are responding to balance. Okay, that brings us back to 43.34. Don't be surprised if you see that price today. The extended target down below is right here. This will create a nice foundation, as I discussed on the composite. This creates a nice foundation to build a few days of balance, to suck in some energy, buyers and sellers, for the next run to really shatter the 44.05, 44.06, and start moving to 44.51. That's the map. That's basically the map of what things look like. So we have 44.33 as key resistance for the session. Not expecting that to get hit today, but if it continues to drift down, then you're looking for the magnet to be that force that pulls price to it, because that's where balance is. Look at yesterday's session. A lot of time was spent here. The day before we tested and fell off, then we came right back to it. This is an important area. It's been an important area since the beginning of the year, and that's not going to change. Okay, that's not going to change until we establish balance away and somewhere else, and that'll be above 44.51. 51 is your key target up here to the buy side. So I'll leave you with that. That's how things look. Have a fantastic Friday and a safe weekend. Please be careful not to bet more than you can afford to lose on a day like today. Don't go into the expiration weekend with just a crappy position on. So just keep it conservative. And then next week we are trading June full effect, and then we continue to place our speculative bets based on the drama that's unfolding before us: Ukraine, commodity prices, crude oil, you name it. But we have the FOMC out of the way for now, and so that clears the slate a little bit. It takes some risk off the table, and you've seen the market respond to that risk coming off the table by buying, by committing money, and we are just, we're just participating with that. I hope you're picking something up every week you're here, every day and every week you're here. I hope you're moving closer and closer to being the trader that you hope to be. Good luck, and I'll catch you on Monday morning. Take care.